Typically British, the new battle for Britain. Now, the UK has just 1 week to decide whether to stay in or out of the EU. We're taking a trip up the Thames to look for some answers. Also ahead, doing deals in Panama. There's our editor-at-large opening a shell company with a lawyer. It sounds dodgy, but is it? And a magical night in Shanghai. Disney finally opens its first resort in mainland China, and it's 4 times bigger than the one in California. I'm Matthew Moore in Istanbul, and this is Money Talks. Now, the battle of Brexit is nearing its climax. People in the United Kingdom now have just 1 week to make up their minds. Should they stay in or leave the European Union? It's divided political parties, friends, and even families. In one of the most typically British clashes during this campaign, both sides of the debate found themselves dueling on the Thames. Rivals lambasting one another's political positions while waving flags and bunting from their boats. Well, not to be outdone, we sent our senior business producer Azar Sukri to London to see if he could find his own boat and a few answers to what a Brexit means in the city.
When UK Prime Minister David Cameron decided to call a vote on the UK's continued membership of the European Union, it came about as a result of political pressure, at times from right here in the Houses of Parliament. But the impact of a vote to leave is going to be felt right across the UK and across Europe as a whole. And one of the places that's going to feel it most acutely is the City of London, Europe's financial hub. In the run-up to the vote, the pound has weakened against the US dollar, stock prices in London, Europe and beyond have fallen, and central banks, including the Bank of England, have made plans to absorb the shock of a sudden rush of funds out of the UK if a majority vote to leave. So here it is, the City of London, home to the world's 3rd biggest stock exchange, the UK's central bank, and some of the most important financial institutions on the planet. About 500,000 people work here, and another 500,000 in financial services around the UK. But this is where all of the UK's money eventually flows through. So, what do people who work in the city think about the upcoming vote?
I think leaving the European Union would be economic madness. I think it'd be a catastrophe for Britain.
At the moment, I don't know which way to go because I'm not seeing anything conclusively enough to say this is where I want to be.
I'd have to say I think we'll have to stick in the EU. It's more fear of the unknown, I think.
Every year, the UK sells about $100 billion worth of financial services to Europe. That translates to surpluses of about $23 billion. Campaigners say that about 100,000 to 300,000 people could lose their jobs here in the City of London if Britain leaves Europe. But campaigners for the Leave campaign say that if there is a Brexit, issues such as insolvency, property rights and company law could all get freed up for companies that operate here.
They also disagree with claims that many city firms would head overseas if the UK decides to leave.
I've spoken to the city about this and I've looked them in the eye at meetings. I've said, really, are you going to actually move from the City of London, going to move your families out of education, our wonderful city that is London, to Paris to deal with President Hollande and his massive taxes? It is just ridiculous.
But the Remain camp insists the UK has benefited enormously by attracting highly skilled, tech-savvy people from Europe, something that could be jeopardised if it leaves.
Migration is absolutely essential in terms of acquiring the right skills, and of course will come to London, the city, the UK more generally. So a lot of businesses are very concerned about this. We're already seeing employment intentions being reduced, and of course business confidence has suffered.
With hundreds of billions of dollars and millions of jobs at stake, the vote to stay or leave the EU will send ripples across the world and be felt for generations to come. Azar Sukri, TRT World, London.
Well, that's the view from London, but what's the latest indication of which way the country is likely to vote? Well, the probability of a Brexit appears to be rising. The latest poll by Ipsos Mori suggests 53% of Britons will vote to leave the EU, while just 47% want to remain. That is a big turnaround compared to just a few months ago. Back in May, the same poll showed just 37% in favour of leaving, with 55% preferring to stay part of Europe. Now, the betting odds, though, tell a different story. The pattern of people gambling on the outcome suggests 60% are wagering on it remaining in the EU. That's according to Betfair. Now, it will still trouble Remain campaigners because that's down from more than 70% in the first week of June. Well, we're joined now by Richard Parry. He's a market analyst at Hantec Markets in London. Richard, just quickly, if you were to place a bet, which way would it be?
Well, I'm not a betting man, but I would have to say that my opinion is still that I think it's going to be just a borderline Remain victory. I think that if you look at the whole factor that you've got this issue in the UK where you've got this silent status quo voter that tends not to like to give its opinion, but then tends to sort of eventually remain with that status quo. And I think that was seen in the Scottish referendum and also through the UK general election last year. So I'd be sort of putting my money still on the Remain camp victory.
OK, not a betting man, but you work in the City of London, which some people call a big casino. But we'll leave that aside for now. It's not just Europe that's watching, actually. Even the United States is watching as well. The Fed chair, Janet Yellen, mentioned it. Let's just hear what she had to say on Wednesday evening.
Brexit, the upcoming UK decision on whether or not to leave the European Union is something we discussed, and I think it's fair to say that it was one of the factors that factored into today's decisions.
Richard, that was the Fed chair, Janet Yellen, there. What did you make of what she had to say there about Brexit?
Well, it clearly is a big issue for central banks around the world, and I mean, because of the potential sort of knock-on impact across global markets could be significant. The volatility that we would experience, certainly already we're seeing that through sterling dollar, and you could even see euro dollar having a big impact on that because of the impact that would have the negative moves on the European economy hitting the euro. Therefore, I think you could also see the safe haven status of the dollar coming into play as well. So through the currency markets, a significant impact could be seen. So certainly Yellen has to take that into consideration, and that was obviously going to be one of the reasons why they used the excuse not to hike rates yesterday.
OK, Richard Parry from Hantec Markets, thank you very much for joining us from London. Well, we heard Janet Yellen a moment ago explaining that Brexit was one of the reasons for keeping rates on hold. But the main problem is the lack of new jobs and stagnant salaries in the United States. And that's a bit surprising when companies are making good profits. So what's going on?
On average, American companies are making more money, partly thanks to the low cost of borrowing, which means their shareholders are also happy. But workers aren't being paid higher salaries. The vast majority of American jobs barely pay more now than they did 10 years ago. That means people are reluctant to spend money in stores. Why is that a big problem? Well, because consumer spending accounts for roughly 70% of the US economy. When people don't spend as much, economic growth slows down. And if that happens for long enough, a country's economy can fall into deflation.
And deflation is exactly what we saw in Japan, which hasn't seen significant economic growth in decades. So let's look at this more closely now with Max Frad-Wolf. He's an economist based in New York. Max, thanks for joining us on TRT World's Money Talks. Should the United States be worried about deflation?
Yeah, the United States should be worried about inflation and is signaling that we are worried about inflation. We're signaling that because we're still at 0.25 to half of 1% official Fed funds interest rate, and we keep pushing back the date at which we'll begin the process, probably a long process, of normalizing those rates. So we remain at a situation where the Federal Reserve has its foot on the gas pedal because we don't believe our economy has enough real power to steam us up the hill, and or because we think there's absolutely no threat of inflation. And that's a hair's breadth away from a fear of actual deflation, a la the recent scares in Europe and a persistent problem that's emerged in Japan.
OK, now, Max, here on Money Talks, we're interested in how these decisions affect our viewers, ordinary people. What does it mean for them?
Well, what it means for the global viewer and the global citizen is that the United States continues to set in place a regime, a global regime of very low interest rates. And the Federal Reserve Bank is the central bank of the United States, but serves as the main influencer to some extent, the most influential of many global central banks. And so when the U.S. adopts a very long-term, extremely aggressive, low interest rate policy, which we have adopted and continue to have, it affects global interest rates. It means, for instance, that saving money and putting it on traditional deposit accounts around the world is going to net you somewhere around zero, possibly less than zero, possibly or almost certainly less than zero when adjusted for inflation.
Max Fradwolf, you got a lot in there in a short amount of time. Thank you very much for your analysis. Now, let's go around the world in 60 seconds for the top business headlines. EU finance ministers are meeting in Luxembourg to discuss Greece's latest progress in meeting its bailout conditions. The Greek parliament recently approved a list of unpopular austerity reforms to unlock the $8.3 billion in loans. One of the world's biggest gaming conventions, E3, comes to a close in Los Angeles. Highlights included new virtual reality tech from giants Microsoft and Sony, as well as the latest games. The 2016 Rio Olympic Games are just 50 days away, but doubts are still being raised over security, the Zika virus, and construction delays. So far, just over half of event tickets have been sold. And the world's largest modern art fair, Art Basel, opens in Switzerland. This year, some 4,000 artists from 33 countries will be exhibiting, showing off art worth more than $3 billion. Plenty more coming up after the break on Money Talks. Why are so many investors betting on taxi apps? We'll have the latest on the race between Uber and its Chinese rival Didi. In our continuing Panama Papers series, we'll show you how to open a shell company and find out why Disney spent billions on its first theme park in mainland China.